The OECD declared optimism for Hungary's economic future. But can the improvement offset the considerably bleaker economic prospects of the Eurozone? Gergely Gabler joins me down the line to discuss. Gergely, after strong fiscal expansion in 2014, the OECD recommended authorities should gradually return to their medium-run fiscal targets to sustainably reduce debt and build room for manoeuvre for future downturns. Now, the rhetoric at first glance sounds more cautious than optimistic, but how would you sum up Hungary's prospects for the coming quarters? What are the main drivers and indeed risks?
I believe that cautious optimism is the best term to characterize Hungarian economic outlook, because this year was quite good. We expect the economy to grow by 3.3% on average, but for next year our growth outlook is 2.3%, so there is a visible slowdown in the economy, and it is also visible in the third and the fourth quarter this year. We also expect that the intensity of EU fund inflow will be way lower in the upcoming years than it was in 2013 or 2014, and this could have a negative impact on the Hungarian economy, and as well as the negative Eurozone economic outlook, because Hungary has 80% of its exports going to the European Union. So if the European Union faces gloomier economic outlook, then Hungary will probably have the same.
The central bank's decision to keep benchmark 2-week deposit rate on hold was widely anticipated. Some are now looking ahead to the MPC minutes. If the words appropriate to achieve the inflation target in the medium term are dropped, could this imply the MPC may be opening the door to lower interest rates over the coming months, or will these expectations wane?
In my opinion, the likelihood of the central bank to cut the base rate further is higher than before, especially after the conversion of the FX loans in Hungary. But our base case scenario is still that the central bank will try to keep the current base rate for as long as possible, and that is why we don't expect them to cut the base rate further, because it would create a situation where the central bank would need to raise the base rate sooner than if it holds the current level at 2.1%. So our base case scenario is that the central bank will keep the current policy rate at 2.1% until the end of next year.
As you mentioned, now that the Forex loans will be converted into forint, and given that when the actual conversion will take place, the exchange rate to be used could be a more favourable one, do you agree the currency will be on a bit of a roller coaster over the coming months? What is your forecast for the euro HUF?
That is certainly true. I believe that early next year the foreign exchange will go on a roller coaster. We expect the euro HUF rate to stay at this currently strong level at 305 or around this one until the end of this year, which supports the public debt to GDP ratio to decrease from the 77.1% last year. But early next year the forint can start to depreciate again, and we expect the euro HUF rate to at an average 310 for next year, which can be higher in the start of the year, so in the first 2 quarters of 2015.
Well, viewers, that's all from Gergely and myself for the moment. Thank you for watching, and see you next time.